Good afternoon, everybody. It is Wednesday, the 9th of February, 2011, and we are live here. So let's take a look at the S&P 500. We did finish with a 35-cent loss, is where I'm showing it right now at this moment. But pretty impressive for when you consider that the advanced decline line was negative pretty much all day long. We had today, what was this about? At the end of the day, 1,800 declining stocks, 1,100 advancers, and it never went positive today. So I think the fact that we held up as good as we did is still impressive. There's been talk recently that the market's advancing on diminished volume, and today we saw a slight down move on heavier volume. As I always say, only price pays, but it does, you do want to take notice when the market seems to just kind of drive higher without a lot of conviction behind it. That is, there's not a lot of new money rushing into this market. It might be at this point just a simple absence of supply that the sellers are just, the shorts have just kind of given up on trying to pick the top. It was eventually going to happen, but we're still in an uptrend. There's, we've still got obviously this, these higher highs and higher lows. Here's where we are in the weekly time frame. If we take a look at some important levels, we're basically beyond the area that that was important back in August of '08, and looking like we should be able to continue to move higher. That is, there's no bigger obvious level of potential resistance that's being shown here on the weekly chart. Some people have been talking about that this market, as far as doubling from the lows down near 66. That's getting close by, but then we have that measured move that also indicates a much higher potential target. But again, we don't want to get too carried away with potential upside targets. Instead, the focus really needs to remain on, and this is where I've kind of overdone maybe this message, but it's true that the market really needs, as long as we're holding above key levels of support and rising moving averages, such as this 5-day moving average here today, and this prior resistance at 131. Those are the things we need to keep an eye on. If we break down tomorrow, let's say down through this 131.55 area, that puts us below the 5-day moving average as well. Then perhaps we get a drop down to the next level. But right now, the worst thing that you could say about this market is that on a 1-day basis, we showed a pattern of lower highs and lower lows here today, but hardly what I would consider a negative session. We came down to just a little bit below the intraday lows. That is not counting this the late day lows from Thursday briefly, but again held above that rising 5-day moving average. And from an intermediate term standpoint, as I always say, we want to look at that 5-day moving average and say, as long as the market remains above that rising 5-day moving average, the intermediate term trend should be considered innocent till proven guilty. Look at this 65 or rather 130-minute time frame. We can just see this is just a real nice pattern, stair-step pattern of higher highs and higher lows. We had a little shakeout here, of course, but market recovered very quickly from that. But near term, I think the bigger level is probably down at 131. That is, the resistance from late last week. Not much else really needs to be said about the S&P 500, except again, the volume gives us reason to say, okay, maybe we're going to break down through that level. Well, let's see what happens if we break down through that level. But until then, we just remain kind of cautious overall. This market's extended, but it continues to rally. The Nasdaq was down a dime today. Obviously, we've got a bigger level of importance right here at about 57. What is this, 57.25-ish? 57.25 is going to be the bigger level. Now, shorter term, we've still got some levels that will be significant near term. The lows, the midweek the mid-session lows from Monday, which are going to line up with that rising 5-day moving average tomorrow near about 57.50. But again, the bigger level is at 57.25. If we break down through 57.25, I don't think it's going to be the undoing to this bull market. It means that maybe we spend a little bit of time in this range. I think I spoke the other day about the RTH and how the RTH, some people were calling this from a failed breakout, came a fast move lower, but it only got down to that rising 50-day moving average, and the retail stocks have recovered nicely. You saw today some real nice movement in there. We saw, what was it, RL, Ralph Lauren, is Estee Lauder, was that? No, Estee Lauder has a good looking chart, but Lululemon has obviously been a strong performer, Under Armour as well. So there's still there's a lot more positives in this market to point to than there are negatives, and when that environment occurs, then we want to be focused primarily on the long side. Of course, there's going to be opportunities for short side trades, but they're going to be the exception in a bull market. The Russell 2000, this market, as we know, held that rising 50-day moving average. This is the market that a lot of people thought was going to be undoing of the broader market index, but we were more neutral in here, which was the correct stance. It was neutral to maybe it's going to turn lower, but with a rising 50-day moving average, still giving it the benefit of the doubt. Now, on a weekly time frame, when we look here, we're still, we're in some levels that have been significant before, but we could still be headed up towards that $85 level, and perhaps all-time highs at the Russell 2000. Just beyond that 85 level. We're not that far off. The Russell has been, as we know, the leader of this market. In the semiconductors. The semiconductors have been a real big winner here recently. You look at that weekly time frame, and here's the highs for this week. We're coming up to these levels that there's potential for resistance there, but so far all we have is one down day in these semiconductors, which was I guess, what was that on Monday? Tuesday and Wednesday pretty much flat. I guess we were down 7 pennies today, but it's holding on that 5-day moving average. If it was to break this little level of support here at about 35.40, then perhaps we would get a little bit further sell-off. But then the question becomes down to where. We still have higher highs and higher lows as long as this $35 level holds. So 35 should be an important level, and it's really not a long distance away, but we can take a look at the essence of this trend and say, the 35 looks like a reasonable level if this market breaks down. But getting back up above today's highs from this tight range that we're in, and that wasn't a very good trend line to draw, but getting back above this level here, basically 35.70, we could be in for another round of uncomfortableness for the shorts again. The financials came down to the conjunction of a couple pretty important levels here today, which was pretty interesting to see. That this prior level of resistance in this 1675 level, this general area did hold a support. That's also where you can see we have the rising 5-day moving average. And then when we look down at a shorter term time frame, we nailed almost to the penny daily S2. So that, if you were selling short at 1675, you really have to look at this, and this is what we're talking about in the chat room, is, we had prior resistance. Resistance broken tends to act as support. So that was one reason not to sell short in there. We're at a rising 5-day moving average right in that area, which says you don't want to sell short into a rising 5-day moving average, and you definitely don't want to sell short after a move has taken us down all the way to daily S2. In fact, we had a nice bounce from there. I didn't play that bounce. I don't think there was an advantage to buying on weakness, but obviously that's the game that some people play, and it worked well in the financials today. So now this level takes on maybe a little bit more significance. That is the 1675 area for the financials, but even breaking that, it wouldn't be a disaster for the financial group. We've got we've got other levels that are that 1620 is going to be the biggest level really, but we've got 1640 or I'm sorry, 1650. So we've got 1675, 1650, and 1620. The daily time frame. I mean, there's just nothing to call bearish here. It's we had a time correction. The market broke out. The resistance held as support. We have all rising moving averages, and we're headed for a test, it appears, of the highs from last year at about that 17 in a dime or so area. So that's pretty much a wrap on these markets. If you guys have some stocks you want me to take a look at, type those into Twitter, and I will get on those here. Do you see any edge in either Open or Bank of America? Let's take a look at OPEN. It's been a monster, and it was up another 57 cents today. I don't see an edge in here. I see huge volume without further. Well, it was up 57 cents, but I see huge volume in here today. The stock is super extended. The shorts hate this thing, but they hate it because they've been so selling short so many shares, and it just does nothing but go higher. It got pretty volatile in here today, though, and I would think it needs to settle in. I mean, gapped up, came all the way down to 80, back up to 88 real quickly. So you've got to really either trade this thing very small share size for a longer term hold, or look at this thing as a day trade candidate, because it's just been all over the place in here today. Just it's a little more insane than what I like to trade. Let's see, what else do we have here? By the way, thank you, Josh, Howard, Darren, and some of these other people who gave me a retweet on this show. Excuse me. Let's see. Wasted for him as well. Thank you. Thoughts on TX at the 200-day moving average? Let's see. Bounce play. I'm not really a bounce play type of guy. Well, let's take a look at it though. TX. Two things I don't like about this. One, it's an ADR. Two, it's in a downtrend. I don't like to play them on that. I mean, it had big volume here. It could be washout volume into prior level of resistance. As a trend trader, I don't like it. So I think that you've got to look at what strategy you're looking at, and understand that the strategy that you're asking me about isn't something that I try to do. To me, trying to play a bounce has been a way that I generally lose money. You look at this thing; it's trying to stabilize, but it's below all these declining moving averages, and certainly not a play that I would get involved in. So I don't think I can give you any good advice on that one investor. I'm more interested in a trend trade, and very funny, Tom. Ha ha. Good one. I like that. I'm not going to type that symbol in. SCCO. Let's take a look at SCCO for Enrique. Southern Copper, just kind of turning sideways in here. It's, we've got all these moving averages crossing back and forth. You could say that it's possibly forming a head and shoulders top. I mean, I wouldn't trade it bearishly necessarily. It looks more neutral to me, but we're getting all this indecision with these moving averages crossing back and forth, and the possibility that we break that neckline and it goes lower, but it's still, weekly time frame, it's still in an uptrend. I would say that it's more likely correcting through time. If it got back above this level near 47.85, then I think maybe it could be a better candidate for the long side. But right now, I don't see any advantage, especially when we have this pattern of lower highs and lower lows below a declining 5-day moving average. That one wouldn't make sense until it's begun to stabilize and then turn back higher. Let's take a look at AXTI for Daniel. AXTI. Nice uptrend here. We've got, let's take a look at the weekly time frame, just see monthly time frame, see where we are in the grand scheme of things. It's just been, filling in, we're beyond we're up to this prior level, and if we get through there, then it looks like the next level of potential resistance up near about $14 a share. So it's had this great rally. It's doing it in a nice stair step pattern above the rising 20-day moving average. In particular, has been the support for the stock. But we've got a real nice uptrending stock here, and pulled back a little bit today. I think you get this thing back. Maybe it's tough to say. Probably needs to clear these highs at 12.20. Maybe you could get a little bit of a cheat buy above $12 a share with a stop below what's looking like it should be important support here. Kind of similar to the financials that we saw this prior resistance holding a support at a rising 5-day moving average. So I think it begins to show some upward momentum again. The path of resistance is higher, and it probably should be able to continue to move higher. Let's take a look at two more. One is Micron, and then the other one would be AGNC, and then we're going to wrap this up. So if you've typed it in after that, then you're going to have to wait till Friday or subscribe to Alpha Trends. We do this every other Monday now, actually, but talking about these things in a chat room all day long. Micron Technology's just been in a real nice steady uptrend, holding this rising 10-day moving average in here, and looking at the weekly chart, it's coming up to a level where it's had trouble last year. So you ask yourself, where does it come from? Where does it have the potential to go before it's likely to encounter supply? And I think it's at that level where you have to kind of be looking at it and say, this prior support acted as resistance. We've just come from 8 to or $7 or $8 a share. We've rallied about 50% in Micron up to a prior important level of resistance. Doesn't mean it will run into a brick wall up here. Obviously, there's no sign of slowing momentum when we look at this 15-minute time frame here. Let's just kind of go down like this. We can see that here's another stock that's just stair stepping higher. Resistance levels becoming support on the way up, and you give it the benefit of the doubt till it breaks support levels. And if you're in it, then you've got a great movement. I think I wouldn't buy this thing. I would think I was chasing it. I would only buy it maybe on a 1-minute time frame, thinking that maybe I can get involved for a day trade, and maybe that day trade turns into a swing trade. But we've got an important level here. It is kind of similar to similar to the AXTI and the XLF. Prior resistance holding support at a rising 5-day moving average. So they look very similar here on a 10-minute time frame. The AXTI and the MU. Okay, last one here is this American Capital Agency Corp, AGNC rather. What's the average daily volume in here? Looks like 4.3 million shares. Looks like it trades a lot of shares doing a whole bunch of nothing. I don't know what these gaps are all about, but that really, to me, looks like trouble with all these gaps. I mean, it looks like it trades like a ADR. Word I was looking for. It's up near the high end of these, what look like to be all-time highs. If it can get through that 30 level with some conviction, then maybe this thing could run. But meanwhile, it just looks like an extremely choppy, frustrating stock that I wouldn't want to have anything to do with. The way you get these gap downs, it's starting to stabilize, but man, it just looks like a disaster to me. I'd stay away. But above $30 a share, maybe it could sustain some momentum. That'll do it, everybody. Thank you for tuning in. We will talk again on Friday. Hope you have a good rest of the trading week.